It didn't go bankrupt because they were losing money on the generation per se, but it went bankrupt because they had a big interest tab to take care of all the debt. When the utilities go bankrupt, they're not going bankrupt because they got a product that people don't want or things they go bankrupt because of the balance sheets and these sort of things that can be fixed. As an individual investor, you've got an advantage over a utility fund. You can go buy the damn thing and they can't. I believe AI is more evolutionary than revolutionary, but I believe it's a stair-step function.
The stock of Talon Energy, an independent power producer, was $67 when Enrique Abeyta, founder of HX Research, recommended it to his readers. It is now just shy of $190. In fact, Enrique and I talked a couple of months ago. It was about $100 when we did a BBAE interview. I have him back now to first take a deserved victory lap, and B, to ask him what to do for new money now or for investors who own Talon. So Enrique, welcome and thank you, first of all.
No, absolutely. Thanks for having me on.
I have some friends who bought Talon. I stupidly did not buy Talon, and I kick myself almost every day because everybody would like a stock that goes from 67, whether it's your readers, or $100, whether if it's BBAE podcast viewers, to 190. That's pretty amazing.
Yeah, and it did that. By the way, we recommended it on February 16th to our paid readers at 67. Mm-hmm. We recommended it. We actually gave it away, which we seldom do. We usually only have a couple free ideas out there. We gave it away as a free idea in mid-March at like 85. So it's not just that the stock is up, to 100 to 200%. It's actually up in a very short time, to achieve those returns. So
if they could all do that, we would be on the beach, right? Nobody would have to work again. It's really the dream of every investor.
We wouldn't be filming these podcasts.
Exactly. So for someone just beaming into this conversation who hasn't read your stuff, who hasn't seen the BBA videos before, can you give like the 1 minute intro to Talon, what an IPP is and why it's so relevant, especially now?
Yeah. So an IPP is an independent power producer. In the utility sector, when you think about the electricity that you get, there's three pieces. There is what's called the distribution. Those are the wires coming into your house. There's the transmission. Those are the cables or the overheads that go between your house and the generation. And then there's the generation, the power plants, okay? And those power plants could be coal back in the day. They could be gas. They could be generating energy from solar, from wind, or they could be nuclear. So what's happened through time in the United States is there has been deregulation. All the utilities 50, 100 years ago used to be all owned by the states or by the federal government, et cetera. They deregulated it all. And to inject competition, there are quite a bit of our generation, so the power plants, is free to trade, meaning that it's not subject to a rate base. It's got risks also, right? If power prices are really bad, the companies can lose money. If power prices are really good, they can make money. You don't have that happening with the wires that go to your house because you can't have that company going bankrupt every 10 years. So what an independent power producer is, it's a company that owns unencumbered generation. Now, what Talon is, and I'll go through the story very quickly, these are the generation assets that used to be owned by Pennsylvania Power and Light. About 7-8 years ago, PPL, which is the name of the company, it's also publicly traded, you can take a look at it, PPL went and combined their generation assets, unregulated assets, with the generation assets of a private equity sponsor that rolled a bunch of them up. They went out, they put a bunch of debt on it, and then you know what happened? Is power prices went down. And as I just said, when power prices go down, these companies can lose money. And the whole thing flipped over and it went bankrupt. It didn't go bankrupt because they were losing money on the generation per se, but it went bankrupt because they had a big interest tab to take care of all the debt. So this happened about 2 years ago. The stock came out of bankruptcy last May. And I mean, my background. I've been a professional money manager for 30 years. I've managed billions of dollars. First started doing the utilities in 1997 with a great team out of Oppenheimer and then Goldman Sachs. Working with those guys. And one of the areas we've made money consistently is utilities occasionally there's probably about one a year, but sometimes it's two in a year and none in 3 years. They go bankrupt. But when the utilities go bankrupt, they're not going bankrupt because they got a product that people don't want or things like they go bankrupt because of the balance sheets and these sort of things that can be fixed. So what we've done very well is we've invested in utilities after a point that they've gone bankrupt. Prior to Talon, many of my investors at Empire Financial had invested with us with PG&E, Pacific Gas and Electric. PCG is the ticker there. So we basically identified this, and it was in the sweetest spot. The company had redone the balance sheet, had a big plan to clean up all these assets, and it was still technically trading in the pink sheets. The pink sheets are the over-the-counter market. So what that meant is that when we were recommending it at $67, it was a very dirty story, right? They still had pieces of debt they needed to move. They had a lawsuit that needed to be settled. They had to move all these assets around. A lot of institutions couldn't buy it, all that. And what we said to people is we go, this is when you want to buy it, because as an individual investor, you've got an advantage over a utility fund. You can go buy the damn thing and they can't. So that's where we recommended it, back in February, March. What we had in the back of our head, and it was only in the back of my head because it was not even in the original report, is that we are on the verge, and we thought so then, and now I really believe so, we're on the verge of a power crisis in this country, okay? This is very simple. Okay. Power generation is hard to build. It's expensive. There's been a lot of money to build solar and wind, which is great, but those are not very reliable, and don't listen to what they tell you. They're actually more expensive when you go in and put in storage and all that. Meanwhile, we've been getting rid of coal, and we've been fighting against even natural gas, and we shut down some nukes. So our power supply has basically been flat. Power demand has grown consistently with the economy, but what we've seen most recently, you had three things. You had onshoring, which is continuing, if not accelerating. I'm from Arizona, and there's like $100 billion going into semiconductor fabs in Arizona. Yeah. Those got to get power somewhere. So this is something that's accelerating. The Inflation Reduction, the aptly named Inflation Reduction Act, is also a big driver of that. You have things like the move to electric vehicles. Those things still need to get energy from somewhere. All they're doing is they're getting it from a power plant instead of gasoline. And lastly, you've got data centers and AI. And this has been what the real catalyst has been. And I know I'm giving the big thesis, and then we'll dive into Talon. But what happens with these data centers? First off, data center growth has been here, right? We've been building with 196 data centers in the country now. The growth has been very consistent. But when you look at different times in technology and the internet, there are these stair-step functions. And it appears that AI is a stair-step function. I believe AI is more evolutionary than revolutionary, but I believe it's a stair-step function, okay? So what's happened was supply did this, demand was going this, and now you've got all the hyperscalers, Microsoft, Google, Meta, Amazon. They're like, we have to have this capacity out there. That's why NVIDIA stock is up, 300% or whatever it was. And when they go out and build these data centers, they've got, we'll call it three challenges. Number one, they just have to get the power, wherever they get it from. Number two, the power has to be consistent. An auto factory is something that I can shut down at night. I don't shut down the internet at night. It runs just the same. In fact, it actually accelerates in the evening. And number three, whether this is an economic value or not, they want to pay tribute to, climate change and try to get clean energy. But we just described the clean energy we're building is intermittent and can't be stored, so you can't use it for data centers. There's only one, other than hydro, okay, which there is hydro, but you can't really expand it, and the hydro's all taken. There's only one place you can find that energy, and it's nuclear, okay? So where we are with Talon now, because I said, we had this independent power producer out of bankruptcy, they had all these things to clean up. It's all cleaned up. They sold their assets that are outside of the Pennsylvania, what's called PJM, which is Pennsylvania, Jersey, Maryland. It's actually about a 14-state mid-Atlantic area. They sold all the assets.
Power consortium, basically, interconnection.
Basically what happens is you have these regional associations so everyone can coordinate and the whole system works, right? You can't have all the companies operating by themselves. So they got 10 gigawatts in PJM. They got rid of everything else. And now it's a very, very pure play on power prices. Okay.
Mm-hmm.
And I'm going to pull up a couple exhibits here in a second. But the way to think about this is now the company's very simple. You got equity, you got debt, you got a bunch of generation. That generation is for this year sold out for the rest of 24. For much of 25, it's sold. But when we get into 26, 27, 28, et cetera, those contracts roll off. Okay. It's just the natural way this business works. So the driver, I would argue this, that without power prices doing what they've done, I would have said that Talon should have been worth 150, 175 in a year. Okay. That was just on, you have an asset that was very dirty and messy and a lot of people couldn't buy. And once it was cleaned up, it should be there. By the way, that's where the stock is. It's actually at, it's trading down a little bit right now. It's at 183. Okay. It's first day it's been down, and I don't even know. It's the first day it's been down in this month or something.
It was 190 yesterday.
Yeah, it was 197 this morning. Nothing's happening. It's just a normal, when you have a stock with an RSI of 80, they tend to, they'll correct some. So, the original value was that. But now what's happened, what was the catalyst for the stock back in February is one of the assets that they sold was a data center. Okay. They had built a data center next to this nuclear asset. And that's, I forgot that part of their 10 gigawatts. The about 3 gigawatts of it is a nuke. That's the 6th largest nuclear plant in the country. It's called Susquehanna. It's in Pennsylvania. Amazon went and paid Talon double what Talon had put into the plant. And Amazon said, I'll buy the power for the next, 10 years, and I'll buy it at 2 times, where the power is selling right now. So when that happened, so there's going to be 3 catalysts that have happened sort of since then. Number 1, Amazon came in and said, I'll buy the power at 2 times. Number 2, an auction happened back in July where there's this little bit of reserve power that goes up for auction about a year and a half ahead of time. The auction came up for 25, 26. The previous auction had gone off at like $40, $50. This one went out at over 200. So people were like, holy cow, like looking out. And again, it's a small portion. It's not the whole pie, but you're looking at 4 times. And then last week we saw the I won't call it the final catalyst, but Constellation, the largest nuclear operator in the country, they control about 20% of the fleet. They're also pretty big in PJM. They went out and they announced that they'd signed a deal with Microsoft. They were going to restart one of the reactors at 3 Mile Island. Now, I say 3 Mile Island and everyone goes, oh holy shit, like, what, holy cow, what's going on? How could they restart 3 Mile Island? Well, 3 Mile Island actually had 2 reactors. One of them went down in 1979. The other one came online and stayed online until 2019 when it was basically mothballed because power prices, the same power prices.
It just wasn't economic at the time.
It wasn't economic. The same power prices that drove Talon out of business, that drove it into bankruptcy, Constellation closed it. So now what Constellation has done is they've restarted it. But embedded in all that stuff is today, forward prices in PJM are about $55. The Microsoft deal is at 110. Okay. So when you look at what's happened here, phase 1 of the Talon story was purely kind of an asset post-bankruptcy, all this story. Phase 2 has been a reassessment of what the earnings of the company will be. Phase 3, and then I'll stop here and let you ask some questions, is what the company's about to do with the whatchamacallit, with the balance sheet and how they're going to return stock. And let me just do this because this will be very helpful. I'm going to share my screen here. Let's see if I can get this to work. I'm going to share. So last Friday, which was September 20th, I think, we published an update on Talon, okay, where we went through the entire idea and did everything. You can subscribe to my free newsletter, daily.hxresearch.net.
Yep, I'm just looking over here.
And you can see here. So you can see it. Okay, good. So you can see here, updating our HX Legacy free idea, stretching its legs. So I really broke the story down into 3 parts because what's happening right now with Talon, there were no analysts that covered the stock because it was bankrupt and illiquid. Now there are, and this has happened in the last month, there are 9 analysts that cover the stock, all with buys, which isn't, bearish at this point. but there's a lot of noise out there. Like, when the analysts pick up the stock, they got to talk about this FERC regulatory thing. They got to talk about this, that, or the other. It's kind of, and we're going to talk about the FERC, but it's kind of missing the point, because now this is really just a three-part story. The first part is earnings. Okay. Here's my rule of the world. If you find a company that's earning $1 and they tell you they're going to earn $2 or $3, the stock's probably going up. That's great growth. But especially if they tell you they're going to earn $2, but then they earn $2.50, that's even better. So let's take a look at the earnings. This is, I kind of just put the EBITDA on cash flow here. You can see this is the growth that's happening at Talon. You've got, 794, which is locked in for this year, $1 billion next year, $1.5 billion. Then in our model, which is very conservative, we actually have power prices kind of ameliorating a little bit, and we have EBITDA and cash flow going down. By the way, I put this in the model. I don't see a chance in hell this is going to happen. Like I actually think it could go the opposite, because when power prices spike, they don't tend to be linear. They tend to go asymptotic. And I think you've got an arms race, et cetera. So the first thing I'll say, is two-parter. You've got great earnings and free cash flow growth. And I think you're going to have big upside to these numbers. So earnings is the first part of this story today. The second part of the story is capital return. And this is the money slide, okay? And again, everyone can access this report. It's for free. The company has come out and they're taking a playbook from a company called Vistra. Vistra is the old TXU, Texas Utilities, that was one of the biggest buyouts of all time, one of the biggest bankruptcies of all time. And basically what Vistra has done, which is also the best performing stock in the S&P 500, although Talon would be right there if it was on the S&P 500. What Vistra's done is they basically just take every dollar they have, and for Vistra, they do go buy other companies, but they just buy back their stock. Talon has indicated, and I believe them, they're just going to buy back their stock. So when you look at this business, remember, there's a lot of visibility. There's stable assets. They've said they could go to 3.5 times net debt to EBITDA. So here's a quick analysis. I'm not going to go through all of it, but you can see here's the shares outstanding right now. The free cash flow, just the free cash flow. If they just went out and used the free cash flow, they reduced the share count by about 23, 24%. But then if they lever up, they purchase an additional 11 million shares. And by the way, I didn't use, I'll tell you what, I used for the share price, I used 185. I wrote this, the stock was at 170 when I wrote this last week and published it. So, but my point is, did that show up? Sorry. I don't know if that email, but my point is, when you look at this, they can buy back 50% of the shares. I think this is low. Okay. The only reason they're not going to be able to buy back 50 to 70% of the shares is because the stock price is at 300. And I'm going to finish my last point, and we'll just then I'll open it up. I think this stock, look, if it was allowed to trade, I think it goes to 500. I don't think it's going to be around in 18 months. I think what's going to happen is Constellation or Vistra is going to come in, make an offer. The company trades at a discount, certainly to Constellation. It's got a clean balance sheet. It's under levered.
What's the market cap now?
The market cap is $9.5 billion. So
not that huge.
But I'm going to show you something funny. Is the market cap's $9.5 billion. Southern and Company just built a nuke that went online. Okay, it went online a month ago. They spent $20 billion on it. That nuke is slightly smaller than just Susquehanna. So Constellation, which trades at a 5-turn or 6-turn premium, actually, I haven't even updated these numbers because I wrote this report before the Constellation Microsoft thing. Constellation actually trades, let me do this. We're doing this real time. So, you've got right now on 26, which I believe you've got Talon at 8 times EV to EBITDA, and Constellation is trading at 18 times. So Constellation could go offer $400 in stock. It would still be massively accretive. Constellation owns a similar nuke that's about 150 miles up the river or upstate from this one. And you can see that done. That's just one of the group of buyers, though. Do you know who else has $280 billion and is one of the largest utility companies in the world or in the country? Berkshire Hathaway. 280 billion of cash. You know what else is happening? Amazon and Microsoft are going out and buying this capacity. Why don't they just buy the whole darn thing? Blackstone just announced a $30 billion infrastructure fund. So, I'll finish here with kind of remind you the three parts, because I don't want people to get distracted about the noise. There's going to be this auction, that auction. Get rid of that out of your head. We're in a positive power environment. They've got a great balance sheet. They're locked in. There's much more upside than downside. Earnings will grow more than people expect. They're going to buy a whole hell of amount of stock back, and I think it's an acquisition target. So last point, if what do you do with the stock? Okay, if you don't own the stock, I actually go buy some. I don't care that it's got an RSI of 78 today. The fact that it's up 150% since we recommended 180%, I'd have some of this in your portfolio because it's going to 250. The way I do things is I basically go and say, well, if I was willing to take a 10% position, I'd go and buy a 3 or 5% position today. And then on any pullback, I would add to it. And I'm on record, and unfortunately I don't own stocks that I recommend just for compliance and all that. But I was on record as damn, I almost want to quit the newsletter business because I'd take half my net worth and put it in this thing. And I've been on a half a dozen videos talking about this stock, and I've been very consistent the whole time. So that's the Talon story in about 20 minutes.
Yeah, and you've grown more optimistic about it. I think last time we spoke, it was 100 and you were thinking 160, 150 was a good target. Now you see...
that was, I'll tell you, that was what I thought could happen by year end. My targets haven't really moved yet. I always was talking, if you go back to the original report, we talked about 250, 300. So I haven't moved the targets. It's just more about timing. With the stock sitting at 100 3 months ago, I'm not going to go say it's going to be 200 in 3 months. That normally doesn't happen, although in this case it did.
So if someone so it sounds like you answered one of my questions already, which is if you own Talon, you suggest just hold on. If you don't own it, maybe take a look. And if it's a fit for you, buy it. The question I'd ask, Enrique, is if someone is Googling about this company, you mentioned FERC, the Federal Energy Regulatory Commission. The first thing, or one of the first things they're going to see, is a number of smart-sounding analysts are saying that a big risk could be an adverse FERC ruling in Talon's case, with the idea of selling something to Amazon. FERC, I think there are two potential hot points here. First is that people worry, and some of the PJM participants like AEP, Exelon are complaining that there's a risk of a low-cost generator like Talon, which is nuclear power, selling that nice low-cost power to a big tech company instead of giving the benefit of that low-cost power to the ratepayers. A second thing is the generation asset may be one piece, but it's still connected in some way to the grid. It has to be because those nukes come down from time to time for maintenance. So they do use a little bit of grid power. They do have some transmission obligation to pay for. And there's been friction in other cases about how much those IPPs should pay for that grid connection in the cases of a captive customer. So yes, mostly that captive customer is buying the power, but they still use a little bit of that connection. So bottom line is, I know because we spoke before, you don't think this FERC stuff is a big risk. If it were to happen, I know you don't think a lot. If it were to happen, what would happen to Talon? And then more importantly, why do you think it's not a risk?
So let's go through those. Let's go through number 2 first, because that's the more realistic risk. What they're basically saying, so the lawsuit that's come out of, or the challenge that came out of AEP and Exelon has nothing to do with cheap power, has nothing to do with any of that. Mm-hmm. It's a purely technical thing, which you actually got it right, and I'm impressed, is they said,
you have
well, when you do those direct to customer connections, you're basically bypassing the transmission cost the transmission payment that you would make to us. And although we understand your argument about the fact that there's very little, there is some. And so, I do not believe that FERC will rule in the favor of AEP and Exelon, and the ruling's coming up here in the next month or so. But even if they did, all that'll happen, especially after Microsoft just paid 110, and the power that Amazon bought is at 60, 70, all that'll happen is Talon will say, okay, we'll pay the transmission, and Amazon just pays more. Okay. So
because these guys are willing to pay way above market rate. Just for perspective,
so,
someone new to this, they're paying way above market rates already. So a little bit more wouldn't be a big deal.
And that's because the total cost of the power to the relative cost of the data center is relatively low. It's not the biggest input. So a doubling of the price doesn't really change their cost stack all that much. But not having power is a binary problem for them. Let's go to this Microsoft thing. Microsoft is paying a 50% premium for 3 Mile Island when Constellation to what Talon negotiated with Amazon. So I don't think that Talon's going to lose that case. I think FERC's going to rule in their favor. But even if they did, it will not make a hill of beans of difference to Talon. Talon will simply say, okay, well, we'll pay $5 a megawatt for transmission. I don't know what the number is, and we'll just add it on, and Amazon will be like, yes, please, like happy to do it. The first one that you bring up, it exists. It's an idea. It has no legal standing whatsoever. Okay. These are independent power producers. They are deregulated. They can go bankrupt, so I think that in the big picture, in the coming years, this could play a role. And this is why when you look at my 27, 28s, I've gotten down from 1.5 to 1.35, and I don't have it at 2 or 2.5. So I acknowledge the political risk. That political risk is not going to exert itself in the next 3 months. There's not a chance, especially in front of election, all that. So, and remember the Talon deal. So the first piece that we just talked about, the transmission, there is an actual legal ruling that needs to happen there that will set some precedent. Okay. So we're going to see some sort of action there. That has to happen. But the second one is a political thing that's legally, there's no standing whatsoever for that to exist as what's going to happen? Like, you got to take it to the court, you're going to have to take it to Congress. It's just, so none of that's going to happen soon. Does any of it ever happen? Who knows? That's what was so clever also about the Constellation deal, right? Because Constellation's like, well, we weren't even using this nuke. So you can't go up to us and say we're taking clean power off. So look, I think that's what I'll be honest with you. I talk about the 1.5 billion going to 1.4, and I don't have it at 2 or 2.5. I mean, if I put that $110 price deck on Talon, it actually essentially 60% almost doubles their EBITDA or grows it by at least $1 billion. And you know what? And remember, they still own the rest of the generation. We could be talking about $3 billion. So if I said to you they're going to do $3 billion of EBITDA, in 4 years, the stock is $500, $600. I'm not saying that because I'm taking this into account. But I think the really smart ones, and there's only a few of them because the guys have covered, like Steve Fleischman, who's covered this group for 30 years, like me. They're giving these nuances. They're saying, okay, look, this is what has to happen. If it does, it's going to be fine. They'll just pass it through. The other stuff is a very real risk, but it's not a real risk in the next 4 months.
And excuse me, in a pragmatic sense, those projections from 27, 28, whatever, many years out, probably in your view aren't going to make a difference because the company will be bought out by then. It's buyout bait in your mind. This is a hot commodity.
Which is unfortunate. I'd rather own the stock and have it I'd rather have them buy back 50% of the stock and the stock go to 500, in the next 18, 24 months. That would actually be much better for me and, all my readers and everyone else. But yeah, I will be, if this is a publicly traded entity, what are we, we're September 26th. If this is a publicly traded entity by year end next year, I will be extremely surprised. It might still be traded, but it will be in a deal already. Because there's it's $10 billion. If I went to go build a nuke, if I could, it would cost me, the same nuke would cost me 2025. Why don't I skip the line? If you could
in the first place, it would be hard as hell to do that.
Why don't I skip the line and go buy this?
Yeah, well put. Enrique, I have never seen anyone more passionate about a stock than you are about Talon. So it's certainly great to have you on and a pleasure to talk. If someone is interested and maybe shares at least a little bit of that passion, wants to learn more, who would you send them to learn more about you and your service?
Well, again, daily.hxresearch.net. We most of our research on ideas and when I say most, I mean like 95% of it is we save for our paid subscribers. So the ones who pay the bills, we've got great people that have supported us for a long time. Again, very occasionally we put a free idea out there. We happen to put this one out there because I had such high conviction. But if you go to daily.hxresearch.net, first off, you can sign up for our free daily email. Second, with this one, right pegged, at the very top of the page, you can see all the reports we've done. And I want to emphasize here, because this is very different than what you'll read with a lot of research reports. I managed billions of dollars. I've raised billions of dollars. I worked on Wall Street on the buy side for 20 plus years. What I'm doing today has nothing to do with that, in the sense that what I'm trying to do is bring the same ideas that I used for my investors, which were CalPERS and UAE and like ultra rich individuals, and put it in language that regular people can understand and that they can relate to, and explain the ideas. And I want to cut through all the BS. And that's why, the FERC thing, which you brought up, is very real. But in my report, I don't even mention the FERC thing, because the only thing you really care about, earnings, capital return, acquisition. Most of the time, 95% of the time, any given stock really only has 2 or 3 variables. Wall Street doesn't want you to know that, right? They want to distract you. They want you to buy their report. They want you to buy their services, et cetera. You don't need to, because the professionals, they're really boiling it down to just a few things. And that's what we do at HX.
And hopefully you'll create some ultra high net worth individuals from your service, at least those who buy Talon.
I will say this. I can confirm I have one investor who is confirmed, sent me the brokerage statement, made over $12 million on the stock.
Wow.
So, I mean, he had some money to start with, because you'd have to have some money to be able to own that kind of position. But yeah, that's our goal.
Great for him and great for you. And thank you so much for joining us. Certainly always a pleasure to talk to you. You're an audience favorite, so I know you got fans out there as well. So Enrique and Abeyta, thanks again. You're still a believer in Talon, and thanks to you guys, as always, for watching us at home.